Good afternoon, this is Peter Towers from ESS BIZTOOLS. Welcome to this webinar on supplying information on ESS BIZTOOLS with a particular emphasis on budgets and cash flows this afternoon. I hope you're having a wonderful day. Later in the webinar, I'll be introducing you to Paul Barnaby from Plan Guru, and Paul is our keynote speaker in a special section of ESS BIZTOOLS this afternoon. We are recording the webinar, and a copy of the webinar recording link will be sent to you in a couple of days' time, so that you will be able to view the webinar with your colleagues if you wish. A special welcome to some of you who I met at the Smith Inc. Workshops in Melbourne 2 weeks ago. A very interesting time looking at outsourcing, practice management and marketing. Okay, so today we're looking at the ESS BIZTOOLS with particular emphasis on budgets and cash flows. What I have on the screen to start with is a chart to give you an understanding of how ESS BIZTOOLS operates. We have the tools which are built around papers. There's 530 odd papers targeted at small, medium enterprises in 62 different section headings that our subscribers are able to badge with their name, address, etc., and send to their clients, and they're allowed to charge for those if they wish. There are hundreds of tools and forms in the total program, and there are video tutorials throughout the system. That was the start, and that has been developed into a range of products. The key ones are the business advisory services. There are training modules to help prepare the accountancy business to get ready to deliver business advisory services. This is a process which we believe every firm should go through, a formal process. If you're prepared to allocate 2 hours a week over a 3-month period with the people who are going to be involved in the delivery of business advisory services, you will be far better prepared and have firmer foundations than what you would have if you don't do that. And then we got the product modules, and we're going to look at one of those this afternoon in budgets and cash flow forecasts. There are 17 product modules pre-prepared, ready for use, and we are adding 3 or 4 new product modules a year into the system. We produce a newsletter each month, which we call Business Plus Newsletter. The newsletters are dispatched on to our subscribers, or available to them on the second Friday of a month. So when I finish this webinar, I've got to sign off on the newsletter that will be uploaded to our website this Friday. Client mentoring and coaching is material to assist in the education process of your clients, because even though there's been survey after survey which has indicated that SMEs are looking for greater services, more of a chief financial officer service, the challenge that accountants have got is convincing your client that you're able to deliver those services, especially if your traditional role has been as a preparer of income tax returns. Pardon me. And we have 9 leadership modules. We have client seminars, webinars. There's 34 of those. And we have another product which is part of the gold subscription, ESS Biz Grants, which assists in the identification of government grants. So what I want to do now is move through to the products. If you have any questions during the webinar today, can you please type in your question, raise your hand, and we will answer the questions during the webinar for you. Within ESS BIZTOOLS product modules, we have a detailed list of what's included. There's a whole range of forms, and the one that I've clicked onto now is the budgets and cash flow forecasts. The procedure control module guides you through the process as to which papers or forms we think you should be using. It also refers to the arrangement which we have with Plan Guru, and we'll talk more about that a little bit later. So within each of our products, there is a procedure control form to guide you through, and you can record the action and list any comments that you need to make. This document would normally be downloaded into the hard drive, whereby you could utilize it within the client's files, so that you've got a permanent record of the work that you undertook for that particular client. I'm just going to show you a couple of these forms. Form 125 is a checklist of items that we think you should be giving some thought to in the planning of a budget and a cash flow forecast. It does require you and your client to set the parameters, to make decisions on what labour costs you are likely to incur in the next 12 months. What's going to happen to material costs? Are they going to go up? Are they going to reduce? What are your sales targets? What's going on in stock purchasing? What's going to be the stock turn rates? They're going to be better than last year or slower? Those sort of decisions need to be reached. Good look at overhead expenses, so that when you go to the actual spreadsheets to enter the data, you've got a fair idea of some of the changes that might take place this year as compared to last year. We've got a rather simple form that you might want to use with your clients to help explain to them what lockup means. And this is just a form on the screen at present which relates to a retailer. How many days does your client have cash tied up in their business through lockup? And there are similar forms for manufacturers and professional services. And how does your client determine how many contacts they need to make in a year if they're going to achieve their sales targets? A lot of people don't really understand this process of saying how many introductions or contacts do we need. They might only have a initial interest rate of 20% from those people, and then they might be only securing 5% actual contracts for the people they approach from proposals being submitted to them. So that would mean that they need to submit a lot of initial introductions and contacts being made if they're going to achieve their sales targets. It's an interesting question to have with your client, and it's one of the ways you can open up to them this whole budgetary process, doing some what-if type calculations to get them to understand what's going on. It's now my pleasure to introduce you to Paul Barnaby. Paul's a chartered accountant from New Zealand. He was the former managing partner of a second-tier firm based in Wellington, and he now lives in Queensland, and he's the regional integration consultant for Australia and New Zealand for Plan Guru. And I'm just switching the control panel now so that Paul can start talking to you and taking you through the budgetary cash flow material that's available from Plan Guru. Thanks, Paul.
Thanks very much, Peter. And I trust you're now seeing my screen.
That's right.
Excellent. Thank you for that introduction, Peter. And as Peter has said, I have a long background in the profession. I currently specialise in what I call predictive accounting. I no longer do traditional accounting, let alone tax work. I only work in predictive accounting. And going back to my practice in New Zealand, I did transform that into providing outsourced CFO services to my clients. And so I just want to talk to you for a couple of minutes about that and how that arises and how it should arise in your own practices. And then I'm going to be giving you a look at Plan Guru, the tool for which, as Peter says, I'm the regional integration consultant. So, and Peter reflected on this before, you should be taking outsourced CFO services to your clients, but in a lot of cases it's hard to get started. In my own case, it certainly was hard to get started, but start we must. We must move away from only providing compliance to providing forward-looking services to your clients. And so the background to that is this, that in my view, there is in fact a bit of a budgeting crisis out there. Because whatever aspect you do it, anecdotally or surveys or whatever, you're going to find that very few SMEs, small, medium-sized businesses, have a meaningful budgeting, forecasting and performance review process in place. Some of them might have some idea of what sales they need to achieve if they're going to have any chance of turning a profit, but in most cases they certainly do not have a true budgeting system in place. And the reasons for that are not hard to understand, because most small business owners won't have the ability and technical skills to do that. If they try, they will most certainly struggle. But more often they don't really see the value because they've never experienced it before, and therefore they don't even try. Probably the more worrying statistic is that in fact very few accounting firms are generating any or certainly significant revenue from providing these services to their clients. And the reason for that has been not that difficult to understand either. It's hard to provide those services, we know that. But until the advent of tools like Plan Guru, the cost of delivering these services to your client compared to what they're prepared to pay has been somewhat of a difficulty. The good news, and hopefully what I'm going to be demonstrating to you today, is this can change. Because there is a huge opportunity out there for you just within your own client database to take these services to your clients. There's just as big an opportunity with the possibility of getting new clients. But in any event, I'm going to say that there is that opportunity there for you, and you might as well take advantage of it. Because what I'm talking about is not new. There is a time-tested process for getting better decisions within our clients' business or even our own businesses. And that time-tested process is budgeting, forecasting and review. So obviously prior to the beginning of the year, we build a budget. And I often ask my colleagues in the profession, do you do budgets for your clients? And the answer frequently is, oh yes, we do. And when I ask in what context do you do it, I'm often told, well, the bank's contacted the client, they're reviewing the overdraft arrangements, they want a budget and cash flow for the next 1 to 5 years. And so I say, well, that's great, but what happens after that? And the answer I frequently get is, well, we do it again next year. That is not being an outsourced CFO for your client. That is being reactionary, but in any event, it's probably better than nothing. But after we've built the budget, what we need to do is carry on and do a monthly, possibly quarterly if your client is preparing quarterly financial statements, but definitely do a regular performance review. And this is where we compare budget against actual, what actually happened, and find out what strategies the client should be undertaking in the context of the information that we've now got. And then the third part of this process is that we need to do reforecasting on a rolling basis. And if you've been doing this and using tools like Excel, that's a hiding to nowhere. It is so difficult. And there again, the news is good. With tools like Plan Guru, we can do all of those three with relative ease and without costing your client a lot of money. Because the outcome of doing those three aspects of the process is this. Just by setting a budget, it's helping your client make decisions. It helps them set the direction and path towards their goals. And when I first started in this area, I was amazed at the number of clients that I had that were very, very dissatisfied with the results that they were getting, but had never asked, or because they probably thought we couldn't do it, help in improving their position. Because of just having a budget is unlocking ways to improve performance in your client's business. And just having a target will improve the outcome, sales, better cost control, etc. The monthly performance review. This is where we suggest you prepare for your client charts, reports, scorecards, whatever's appropriate for the individual client, so that you can compare actuals with budget. You question the very decisions that were made, firstly in the preparation of the budget, but secondly in some of the strategies that have been put in place within your client's business. And the third aspect, reforecasting on a rolling basis, allows us to help our clients with new decisions, new tactics. The second point is vitally important. With a rolling forecast, we can preempt crises, either cash highs or lows, so that if there's going to be an excess of funding required, we can deal with it before it's a problem. And all in all, that process is going to give your clients more confidence and less stress. I'd just like to finish off the slides by talking about what I call the repeating cycle of success. And what happens here is that there are four aspects to it. And they're colour-coded on this graphic here as purple, orange, green and blue. And so the purple one here, shown January, February, March, this is the strategic plan. This is where you and your client prepare a strategic plan for the forthcoming financial year or longer periods. And this sets the basic direction for the future. And over here in sort of May and June, maybe as late as July, you'll prepare the budget for your client. And this is where you'll set up the high-level parameters that have been arranged in that strategic planning process. And then you'll see the green line, which is continuous right throughout the year. This is where we're reviewing performance against the original budget. And the last is the inside line here, the blue one, the rolling forecast, where we're preparing information which will give us an accurate and tactical view of where the business is headed. So, guys, that's what the process is all about. I'm now going to just open Plan Guru, and I'll be showing you the tool that I've been working with now for about 2 or 3 years. And what I'm going to do in showing you through Plan Guru is I'm going to show you two different models. One is a very top-level model, and one is a more detailed and sophisticated model. Typically, we would be doing budgets in detail, but I just want to show you how this marvellous tool helps you to set up that three-way forecast: revenue, balance sheet, and of course, cash, not important cash flow. So here in this model, I've just got a single line revenue, single line cost of sales, single line for overheads, and down the bottom there, I've got net profit before tax. Over in my balance sheet, which I've already prepared, you'll see I've got things like inventory and accounts receivable, accounts payable and GST and so on. But more importantly, it's showing a cash and cash equivalent line there, which you can see is negative right through to about February, March. So if I have a look at the cash flow statement, this is shown in the internationally accepted format for reporting cash flows, starting from revenues, working through changes in accounts receivable, changes in payables, inventory, GST, etc., to come up with a cash position for the month and therefore then on a rolling month-end balance. So you can see here in my little example, I've got negative 63, negative 62, and then it starts reducing. In this case, I haven't actually even shown a bank account. But let's say, in my example here, I did have a bank arrangement where I've got an overdraft available of $60,000. I can very quickly put in a category for bank overdraft. I will tell Plan Guru that this is a short-term payable based on a line of credit where I don't require a minimum cash balance, and because it's an overdraft, it's drawn up and down in multiples of a dollar, but I do have a limit of 60,000. As soon as I apply that 60,000 bank overdraft limit, it will recast the cash flow, and you will now see that in month 1, July, my overdraft is drawn up to the limit, and I've now got a cash deficit of 3,197. After that, it operates within the overdraft. But if I have another look at the cash flow statement, you'll see there that the operating deficit is still 63,197, but now it's been provided for cash from the bank overdraft arrangement, so my overall deficit is only 3,197. So the reason I'm showing you this top level is so that you understand how Plan Guru is behaving. Some products that I have seen only report cash flow as the difference between one or more bank accounts opening and closing bank balance. That is not cash flow, that's bank balance. Plan Guru always accurately gives us the result. And just also while we're on the simple model, it's very easy and quick to do what ifs. So what if I couldn't have that deficit of 3,100? Maybe I need to change my accounts receivable, or maybe I need to change my inventory, which has been set up on the basis of holding 70 days stock on hand on day 1. If I move that back to 60, and which would mean my purchases in month 1 would reduce, therefore my cash outflow would reduce, and hey presto, I'm now operating within that bank overdraft. But notice that in the cash flow report, I don't show a surplus until I get through to, I'll just scroll across so you can all see it. I don't show a surplus until I get through to February, when the overdraft runs over into credit, and then it builds up. So, that's the simple model. I'll now open up a more sophisticated model and show you a few more features of Plan Guru. Right, here we go. Okay. This example, guys, is a computer reseller. Quite a lot more detail and sophistication in the model, but suffice to say that I imported the historic data. I started with 13, 14 numbers. There's the revenue statement, and I also imported the opening balance sheet, and then I prepared the budget through for the ensuing year. Let's go back to that revenue statement. So you can see that this client has sales and cost of sales reported in groups, and those groups being hardware, printers, software, and accessories, and then individual lines are shown here with numbers against each one. The advantage of doing that is that you can, if you want, just close up the detail and just look at the group totals, or alternatively break out the detail on a subtotal by subtotal basis. When you hover over a cell in Plan Guru, if it's a computed cell, it will give you a pop-up and tell you how that's been computed. So you can see there that in the case of my sales of PC box only, that's based on unit sales at a price of $4.50. site. The advantage that gives us is that we can produce budgets based on what drives our client's business. The concept of budgeting from last year, plus or minus a bit, in my view, is old hat, and sometimes a good guess would be better. In this case, I'm starting with the units, which you can see here in this non-financial data page, and those are the units per month that have been forecast by my client as their sales. They're seasonally adjusted, as you can see in October, November and December. Those are the unit sales that we're expecting. Over here in the revenue statement itself, if I drill down, you can see there, in case of sales of PC box only, I've picked up the unit numbers from that non-financial page. That's where the tick is, and then I've applied a price of $450, which has given me that sales total of 66,000 in the lower months and about double that in the high months. So that's how the sales has been calculated. Cost of sales I've done on a basis of a percentage. So you can see there that PCs are 71, software is 50% of sales, printers are 80%, and then I'm down to my total cost of sales and the gross profit line. A couple of other things to show you. Wages and salaries here I have got linked to an Excel file. And that is a live link, so if the Excel file changes, then so will Plan Guru. A couple of other things, you can have supporting schedules within Plan Guru. So over here you can see I've got a couple. I'll show you general expenses there. You can see there that my general expenses budget of $270 a month is based on 3 lines: refreshments, miscellaneous, magazines, etc., and that supports the overall line over in the revenue statement. So just scrolling down a little bit further, there is quite a lot of automation available within Plan Guru. Depreciation is being calculated automatically based on the cost value in the asset in the balance sheet. Things like interest on bank overdraft and on the term loan, that's all being calculated automatically by Plan Guru based on rates and other factors that I've set up in the file. I'm calculating tax expense based on a corporate 30% rate. Over in the balance sheet, you can see here I'm calculating accounts receivable based on average days to collect, in this case 70. I have got all my sales being shown at 70 days. If you've got differing sales groups with differing collection rates, Plan Guru handles that as well. So that's collections on the receivables. Inventory I've got set up on a varying number of days across the year as the seasonality affects us. In October, November and December, where the sales are flat out, the stock level drops down to 90 days, and then in January it comes up again to 120 days. I mentioned depreciation being automated. You'll see there that the accumulated depreciation is growing automatically in the balance sheet. GST is automatically looked after by Plan Guru, as it is in other GST or VAT countries around the world, because Plan Guru is rapidly becoming the internationally accepted standard for budgeting and forecasting. It's sold in over 50 countries around the world. I've set up accruals for PAYG and super as I have for tax provision, and so that's how the budget is all organised. So if I have a look at cash flow here, here is the predicted cash flow from the budget. I'm operating within my overdraft through till February, when the overdraft runs over into credit and I start getting a cash surplus. There are other aspects of Plan Guru which you need to know about. It has ratio analysis built in, and we'll show you all the typical KPIs, and you can also build your own. However, coming back to that process of budgeting, review and rolling forecast, that's what I want to just go on and show you now. Okay, so I've got a budget there. If I scroll over to the right, you can see there that it's giving me a total revenue expectation of around 3.5 million. I can bring in actuals, and again, these can be imported. So if I have a look at the actual results, you'll see there I've got actual results up until December. And I've got actual revenue statement, and I've got actual balance sheet. So when it comes to that review process, you have some choices as to how you communicate that to your client. You can generate a report directly within the Plan Guru application. You can generate reports that you tailor on a client-by-client basis in an add-in that's available to Plan Guru. And thirdly, there is the possibility, if you wish, of reporting to your clients and communicating with them with a cloud tool called Plan Guru Analytics. And I'll just quickly show you that before I come back to Plan Guru and show you a few other things. I'll just open that up. And that's what we're looking at now. So we're looking at the period up to the end of December. We've got budget versus actual for December there, and a variance in dollars and a variance percentage. And then on the right-hand side, we've got the budget versus actual year to date. That is capable of drill down, so you can see I've got just total revenue, total cost of sales, total operating expenses. I can break out that detail. I can break it out at this level if I want to, or if I want to actually get down to a greater level again, I just need to continue depressing the plus key until I get down to the line-by-line performance. So this is where we're reviewing, prior to the client seeing it and then sharing it with them in this format, the fact that their sales, the total revenue for the month of December was budgeted at 466, they actually achieved 624, so they'd overachieved by 158. For the year to date, there was a 2,100,000 budget, but the actual achievement was 2,763. So that's the variance reporting, and that can be done revenue statement, balance sheet, and of course cash flow. I go back to Plan Guru now, and I'm just going to open another file. Plan Guru handles historic data, budgeted data, actual data and forecast within one file. Because I like to show the pre-archiving of the budget and the post-archiving, I do that in two files. But suffice to say that once you've finished with your budget, you can archive it, which means that it's put away, available for reuse, but not for changing, because the original budget should never be changed. What should be changed is the rolling forecast. So I'm just going to open a file after I've archived my budget, and I'll demonstrate what that's all about there. Okay. Now, if I just come back to the pull-down menu, show my budget again, and scroll across, there is my 3.5 million budget that we looked at before. 3.5, gross profit of around $1 million, net profit after tax of around 178. If I now ask for forecast, what will happen is that I will get the actuals up to the end of December, and then I will get the remaining budget through the end of the year. So there you can see now the revenue statement, actuals up to the end of December. I scroll across, you'll now see that the forecasted revenue is 4.163 million, the forecasted gross profit is now 1.2, and the forecasted after-tax profit is now 263,000. So that's the forecasting process. I scroll back up to the top, and again show you at the sales level. I can reforecast now if I want to. So I can either reforecast the sales units. So you can see I haven't got the previous results available to me. I've only got the forecast results, or I can change the price. So over here, I think from what my client tells me, that we should be able to get $500 for a PC now from January on. So I simply make that change. Yes, there is my forecast updated. I'm now forecasting a total revenue of, where's it gone? 4.207, and if I go to that all-important cash flow, you can see that my forecasted cash flow now is showing a surplus by the end of the year of around 214,000. So that's the process, people. Budget, actual, forecast, and then reporting to your client. Okay, I'm going to pause there and ask Peter if there's any questions that anybody's got. I'm happy to field them.
No, we haven't received any questions yet. Don't forget, if you have questions, can you please type them in and raise your hands. While you're thinking of that, I'm going to move into just show you a form within the system, within Plan Guru. Just a moment, we've
Peter, if my voice is still there, I might just also add that if anybody would like to talk to me separately about Plan Guru, feel free to give me a call. You can find my phone number on the Plan Guru website, planguru.com, or through Peter or my own website, beyondaccountingtechnologies.com.
Yeah, we'll show. Yeah, thanks, Paul. I've just clicked through to a form which we've got in ESS BIZTOOLS. We call it BAS, Business Advisory Services, Form 144. That's giving a summary of a special arrangement which we have with Plan Guru for our members to access the Plan Guru products, and that's a link within the ESS BIZTOOLS website now, which summarizes those. And I'm just going to click on there, and we'll go to the Plan Guru website again, but in a different aspect of it. And Paul will comment about the subscription prices. We're just waiting for the internet to process that. Doesn't seem to want to work. What I might do to show you what I was just about to show you is go to within our website on business partners. ESS BIZTOOLS has arrangements with a number of businesses whereby we have special discounts for our subscribers. One of them is Plan Guru. And if we approach it this way, hopefully it will work this time.
Remember the old saying, Peter, to err is human, but to really stuff things up, you have to have a computer.
Yeah, I'm seeing that. There it is, it's worked. Okay, so we're on the Plan Guru website now. The pricing for Plan Guru is there, and Paul, if you just want to comment on that, thanks.
I will do. That's Plan Guru for a single company, so that's pretty much pointed at small business clients. And those prices, by the way, are US dollars, and they're also outright purchase, not subscription. So the base version of Plan Guru is $3.99. The enhanced or mostly typical version is $7.99, and there is a business package which includes some getting started assistance at $11.99. Peter, if you can click on for multiple clients, multiple companies for me, up the top. Use on multiple clients. This is the advisor area. And so you can see again that the Plan Guru Advisor is $7.99. That is for 2 companies or clients, and it's about an additional $200 per client as you add clients to your license. This can be done upfront or as you get more successful at selling their services to your clients. Plan Guru Advisor Plus $13.99. That includes some getting started and marketing assistance from my company on a online basis. Alternatively, if you prefer, you can have one of your team attend a 2 half-day workshop again online, where we teach exactly how to use Plan Guru right through. We also have custom pricing available if you'd like some assistance in your practice to actually set up the target, set up the budget, do the team training, all the software and marketing assistance, and we give you a specific quote for that. But again, those prices are purchase, they are not annual subscription. There is an annual support fee of around 30%, so all in all you're going to see that Plan Guru is very, very affordable. Thanks, Peter.
The arrangement that ESS BizTools has with Plan Guru is our subscribers receive a 10% discount on those prices. So I'll just leave them there. We have a questions came through. Thanks, Debbie. Paul, are you able to put comments explaining reasons between budget and actuals as a part of the management report type 2? Tool, I mean not tool, as a management report type tool.
Yes, you are. It would take more time than we have in the webinar to explain how that happens, but yes, you are able to tailor your comments on a client-by-client basis.
Okay, thank you. What I now want to just show you, because this is an information webinar for people that might be interested in subscribing to ESS BizTools. We hope you are interested. You've just received a small snippet of the services that ESS BizTools make available. On the screen now you have details of our packages. We do offer variable membership levels, gold, silver, bronze, and a Business Plus only package. Business Plus is our newsletter only. You can get a guest package straight away if you haven't already done so, and that will give you 30 days access to the ESS BizTools site. There's a wide range of material, as you can see. The gold package includes everything within ESS BizTools, together with online publishing rights. Many of our gold subscribers publish the ESS BizTools papers. There's 530 of them within a secure section of their websites, branded with their own name and address details. And this information is available to their clients who have a password and prospects that they've given the password to. Now, that gold package costs $262 per month, including GST, or there is an upfront discounted price of $2,970, including GST. And I'll just leave that segment on the screen, and you can see it on our website. Silver costs $192.50 per month, and there's an upfront discounted price of $2,189. The next webinar in this series is on Tuesday the 15th of September at 2 p.m. when our guest presenter is Trevor Marchant from Marchant Dallas. Marchant Dallas is a professional sales training and marketing training organisation who do a lot of work with accountancy firms. They have worked with quite a number of the ESS BizTools members and their clients, and they all report very good results to us. We are happy to receive any further questions. If you think of some questions later on that you would like either myself or Paul to answer, could you please email them to me, peter@essbiztools.com.au. Thank you, Paul, for your contribution to this webinar. Thank you to each and every one of you for allocating some time to us today to participate in this webinar. We do really look forward to you joining our organisation as members of ESS BizTools, and obviously we're happy to answer whatever additional questions you may have. Thank you. Have a great day. Goodbye.